Investors, first off, happy post-Thanksgiving and Black Friday shopping day. Hopefully you had a great Thanksgiving and you benefited from the ongoing bull market and are in the economic position to splurge a little for yourself and others over the upcoming holiday weeks. If not, my thoughts and prayers go out to you and your family during the holidays. I'm going to keep this one short, but I hope you pass it on to others and take a moment to subscribe to my channel to help me get above 1,000 subscriber base before 2025 begins. Investors, we're in a bull market for equities. We've been in a bull market at least since 2011, secularly and cyclically since October 2022 low, as well as the October 2023 pivot higher from around 4150 on the S&P 500. If you're watching and following doomers like Robert Prechter, Harry Dent, Robert Kiyosaki, Jeremy Grantham, and a long list of retired hedge fund billionaires, you've likely missed most, if not all, of the move higher in U.S. stocks the last 2 to 15 years, especially in the case of chronically wrong Harry Dent and Robert Prechter. Hopefully, it hasn't permanently damaged your financial plan. Investors, give us a call before year end, and hopefully one of our Oak Harvest advisors can help you decide if another path is better for you and your money. So quickly, as I said, investors, it's a bull market. And the funny thing is that in 2024, that is particularly since late summer, it's been following a script we've seen relatively recently. What year was that? Yep, 2016. The same year that the then long shot Donald Trump shocked the world and won his first term as our president. Investors, pretty much ever since Donald Trump was reelected, many economists and commentators on the financial news networks like Bloomberg and CNBC have spent countless hours trying to convince their viewers that Trump 2.0 won't be like Trump 1.0 for the economy and for your wealth. Well, investors, so far it appears as if they were pretty much wrong in 2016 and 17, and they've been wrong year to date in 2024. My question to investors is, why do so many people continue to put so much faith and energy into listening to or following people who've been wrong in their views for years on the economy and markets, if not decades, particularly when it comes to their finances and their investments? In my world, for now, until otherwise proven wrong, Trump 2.0 will be much, if not close to the same as Trump 1.0. Investors, history does repeat in the financial markets time and time again. Humans are creatures of habit, patterns do repeat, and as I like to say, it's the same people managing the same money, doing the same things time and time again. Why would you expect something different from their outcome? I'll give you a quick few examples that I recently stumbled upon. The first and foremost is Nvidia, which is currently the most valuable company in the world. Turn on the TV and you'll hear many tell you that Nvidia's stock performance is unprecedented in 2024. Yes, it's true for a company this size, it is unprecedented. But take a look at Nvidia's chart year to date. Year to date, the stock was up about 186% into this writing Thanksgiving week post-Trump 2.0 win. That's a hell of a move. Now, take a look at the chart of Nvidia back in 2016, back through Thanksgiving week post-Trump 1.0 win. Yes, investors, your eyes aren't deceiving you. Year to date in 2016, Nvidia stock was up a little over 184% in 2016 into the exact same post-Trump 1.0 election into Thanksgiving weekend. I mean, how is that possible? Almost the exact same massive return to the day, over 184%. I mean, ask yourself over the weekend. Take a look at the two charts overlaid on top of each other for 2016 and 2024, and then an extension of Nvidia's chart in 2017. Investors, this is not a projection for what's to come for Nvidia in 2025, but given what Jensen has said historically versus how their business has performed, it would certainly be something to keep an eye on and keep it in the back of your mind in 2025. Will all those AI bubble calls prove prescient, or have they been 1 year and counting too early? Time and time again, when I do this overlay, particularly of the second half of 2016 versus the second half of 2024, I get near the same results, at least in trend, if not both trend and level, for so many different asset classes and financial instruments. Bitcoin, the dollar, interest rates, both nominal, real interest rates, and yes, inflation component too. Many commodities look the same. Stocks and sectors that were working and leading in the fourth quarter of 2016, yep, working and leading again in the fourth quarter of 2024. Stocks that were weak and missing earnings, as we say in our trading desks, blowing up, blowing up again the last few weeks this year. Even outside of technology, patterns and histories continue to seem to be repeating almost to the day. Just last week, industrial and agricultural giant John Deere reported their third calendar quarter and took down their estimates for sales for 2025, which was largely expected. However, the financial press was out en masse with negative comments and tone. Well, what happened to John Deere's stock? Yep, it gapped higher, closing the week almost 10.5% higher in 2 days at a new all-time high. Now, overlay the chart of John Deere from 2016 onto 2024, and what do you see? Take a look at that overlay along with the extension of John Deere in 2017. Yes, investors, almost to the exact day in 2016, John Deere's stock did the exact same thing on their third quarter 2016 earnings report. It gapped to a new all-time high in the back of investors looking out beyond the valley to a hopeful turn in their business in the second half of 2017. I mean, is history repeating? Are you bearish and fighting the tide? Are you listening to doomers still, just hoping that one day they'll be right so you can tell the world, I told you so? If so, you are likely investing based on emotion, which is rarely a good thing to do. I know I do it at times too, and it almost never works out for me. Investors, against the near decade-long doomer calls from Jeremy Grantham, Harry Dent, Robert Prechter, Jim Grant, and a myriad of retired billionaire hedge fund managers that come on CNBC almost monthly to scare viewers, we're in a bull market for equities in the US. The group of doomers that I've been calling out for my time here at Oak Harvest has been wrong for years, if not decades now. Exactly why is now the tipping point that they'll suddenly be right? If they've been suddenly right now, given how wrong they've been for years, isn't it just luck? Calling tops is hard. You have to be right in both price and time, not just once, but twice. Calling a top or a crash in October of 2022, or saying you're managing risk below lines in the sand of 4160 in October 2023 isn't considered early in the real world of managing money. It's being wrong. Being wrong is part of this business that we all deal with. Not admitting it is the bigger mistake unless you're just selling fear in subscriptions or newsletters. Investors, until proven otherwise, my suggestion to you, trade or invest similarly to Trump 1.0 for at least the early stages of Trump 2.0. Why? Because it's the same people doing the same things, and therefore the outcomes tend to be very similar. Look no further than the performance of Nvidia year to date in 2016 versus 2024. I mean, how is that possible? Less than a 1% variance in total return over two 11-month periods, up over 184%. I mean, think about that one over the weekend. So for myself and the whole team here at Oak Harvest, I hope you had a great Thanksgiving yesterday and have a great Black Friday. Get out there and shop and help the American economy.